and I'm gonna show you right now. Now, in an uptrend, which we were in the trade I took, we were in an uptrend, and then we had a change of character. I saw a QM pattern. This is usually a reversal pattern or a continuation pattern. In this case, it was a reversal pattern. So we had higher highs, lower lows, higher highs, lower lows, higher highs, lower lows. Now, what I look for in that QM pattern is when a high is broken, and once that high is broken, our low also broken. Now, I don't just get into the trade right after this low is broken. I'm waiting for a tracement. Now, from this high to this low here, from this high to this low here, I'm looking for a trade setup right here, somewhere in between this high and this low. But what I'm also looking for is, or what I consider is, I'm looking for support and resistance. I'm looking for a 50% somewhere within this high and this low. You can just mark it somewhere in the middle, or you can take out your Fibonacci tool and mark your 50% area. Now, once I find my 50% area, um, once I find my 50% area, I would look for support and resistance in this area, and supply and demand. I'm looking for a fair value gap, and the last thing I'm looking for, or even the very first thing I'm looking for, is another QM pattern. Yes, a QM pattern around this level, but in a smaller time. If this was the higher time frame, let's say it was our 1 hour chart, uh, a 1 hour time frame, I would probably go to a 15-minute or a 5-minute to look for that QM pattern. And then I know, with all these confluences, once my QM is formed, I'm in the 50% area. I have support and resistance. There is also supply and demand. All of these things. And our major trend, which is the 1 hour trend, is also in a reversal, and our smaller time frame has just reversed. So all of those confluences giving me that signal that the market is going to reverse again and move to the downside. I'm in. So let's go to the charts and let me show you what happened and why to pick this high, that high, and this low. Maybe this high, low to this low, we have our QM pattern. So now what I'm going to do is I'm gonna go within the 50% area, which is around here, maybe here. Then I'm gonna look for supply and demand around here. I'm looking for support and resistance. And once I find all of these confluences, I'm going to get in and run with the money. But let me just show you something quick one. Let me draw the QM pattern for you. Let me show you. So let me change the color of this high, broken, of this low, broken. Now, this is what a QM pattern looks like. With a impulse move to the upside, with a retracement, then we have a impulse move to the upside, we broke the high, we came back and we break the low. And then what happens is we retrace back somewhere into the 50% area, supply area, support and resistance. And as you can see, I didn't just get into the market just around here at the 50% area. No, I waited a little bit, and what I saw was this tail bar, this pattern right here, this candle right here gave me another influence that the market is going to go down. And as you can see, I put my first order idea. But let's show you something. Yeah, what I wanted to show you in the beginning. From this high to this high, let me change the color so you can clearly see. From, let me clean up everything. So yeah, from this high to that high, market went up from here all the way up here. Now, if you look at your RSI, we have a high here, right here, with this high, and we have this high right here. But look at this. The market is going up, but your RSI is going down. This is what we call divergence. And this also gives you another signal that the market is going to reverse, or the move to the upside are done. The bulls are done, they are tired, and the bears are coming in. Everybody is taking profit now. The bears are coming in, pushing the market down. And as you can see here, the market was pushed